Hello, fellow traders. 'Tis I, the Rumpled One. It is March the 21st, 2018. Let's talk trading. Madness to the methods. Usually it's method to the madness, but it seems like maybe I confuse some people because I go through a bunch of charts every day and they're thinking that they have to do all of these methods. It's no, no, no. You see, you can just do one of them. You don't have to combine them, and they each stand alone. Now, sometimes there's some overlap. Somebody was asking me about the rat zone and the wick zone. I go, yeah, sometimes, a wick zone trade happens, to also be in the rat zone, or rat zone might be in the wick zone. But no, they're separate and distinct methods. Each one has its own statistics. Each one's been proven independently of the others. You don't have to combine them. You only have to use one. You don't have to use them all. So when I flip from chart to chart, if you see a chart that speaks to you, that rings to you, that makes sense to you, that looks like, hey, that you could do it, that's the method that you should try. And that's not just true of the methods I present, but, there's hundreds or if not thousands of other traders out there, with YouTube videos and channels and showing you their methods. If something rings true to you, something speaks to you, if you feel like, what, I think I understand that, give it a shot. And like I say, put up a little $100, dollar risk per trade, and trade it 100 times and see how, and after that 100, see if you're winning or losing. And don't give up after the first 30, if you're behind. No, stick it out for the full 100. Because, the hot streaks and cold streaks aren't really hot and cold. There's just part of the normal distribution of wins and losses. So just keep that in mind. And of course, always keep in mind your money and risk management. And like I just said, we're going to risk $1 per trade for the next 100 trades, and we're going to see what happens. Okay, dollar Canadian. Oh my, oh my, oh my. Look at that, 140 pips below the weekly open. Did any of you traders jump on that trade? And as you can see, we still have 4 gaps that haven't filled. And a trader, we were exchanging emails last night, and he was saying, hey, something's wrong on my dashboard. It says all of them say filled. So I go, well, but on mine, there's still some that haven't. Well, you see, different brokers have different prices. And on my particular chart, the weekly low at the time was about a half a pip above the previous week's close. So there was a gap. But on his chart, that gap had filled, the weekly low was about 2 pips below the weekly close. So you see, because the Forex market is not a consolidated market, prices vary from broker to broker. Now, I don't know if all of you knew that or not, but that's just the case. Just like spreads differ from broker to broker, and your quote at the time may differ from broker to broker. In fact, when I was back in Tucson and I had 5 computers online, I had 3 different broker feeds. And sometimes if I saw a couple of brokers, the price moving up, but the third broker wasn't moving up, I go, you know what, these guys are lagging. I can jump in, and usually I could nail it, get some easy pips that way. So you might consider, if you've got the computer or screen space, having multiple feeds. You might be able to do that. But anyway, as we can see here, price has come back down to the previous week's midpoint. Basically a 50% retracement. And you can see here in the daily what happened. Broke out of that previous day's low and continued south. I mean, and if you think about it, that's quite the move. You know, if you go back here, it's quite the move. I think it's on a different screen. That's something I was going to show. So any of you traders that took that breakout, you've been rewarded. Once again, now normally you don't trade dollar Canadian during the Asian session. So this is right here. So right there, that looks like some kind of price action. Below the daily open, look to short. Above it, look to long. Kind of a rule of thumb. And that's definitely contrary to the rat zone. But it's a different trade, different idea. And speaking of the rat zone, as we can see, price is putting in a low. So a new low right here. Close minus low is 0. Putting in a new daily low. And somebody asked, well, when do you know when it's the high and low because it's still in the middle of the day? Well, the thing is, you don't know if it is the daily high or low. But what you do know it is the current daily high and low. And by the end of the day, the current daily high and current daily low are going to be the daily high and low. So basically, it's you're going to take your trading opportunities based on that. It's just that simple. I don't know. The price could continue to go down. So, but if I see a trigger in here to go long, I will take the long. Now, we've got a red H1. What's the rule of thumb? Don't trade against H1 candle color. So, unless price starts to come back to this level, I'm just going to sit and wait. I'm not going to take that trade. Doesn't make sense to take that trade. So you just sit and wait. And now, what'll probably happen is, let's see, we're there. What'll probably happen is we'll get a holo zone down here. I'm going to skip ahead a few charts. And so we'll be able to take a lowest open trade that's probably within the 20 pip rat zone. So that's how you can see how some of these methods overlap. Whoops. And so here we are, we're looking at the pivot, and you can see here the pivot and the open were really close, and it looks like price went out, hit the pivot, turned around, and headed south. And you can see we're below S4 on the daily. We hit the weekly pivot, and there's the weekly support. Price action, we've got a 3-ball. What does that tell you? What does that tell you? What does that tell you? Well, usually when there's a 3-ball, you can see it failed to make a new high, and what happened next? I mean, technically, you could still be in that short. From, that's 2 days ago, from the 31.20 area down to the 29.50 area. You'd be putting some pips in your pocket. Right here. And if you were just jumping in today, there you are at the 31.50, failed to make a new high off of that 1-ball, and it's dropped like a rock. And you know, we've got the FOMC coming up today in about, an hour and 45 minutes. Should be some nice price action there. That's, tell you the truth, that's what I'm waiting for. I know a lot of people don't like trading news. I love trading news. I like that fast action. And the 5 lines, once again, here we go. You can see it. It didn't cross the line above. It crossed this line, and it's just continued on its way down. You can see here it touched the line, poked its head over, and back down we went. And you can see here, once again, the weekly and the monthly. We're above on the month. We're down on the week. And the wick zone, there you have it. Price does not like staying in the wick zone. You guys probably see that chart go, here he goes again. And here we are looking possibly to get a lowest open on the holo setup here. We've still got 45 minutes left in the hour. Don't know if it's going to break out or not. Looking at price action, you've got a lower high here, higher high, lower high. So it needs to get above this range for price to start to go up. We'll see what happens. And as you can see here, once again, you can see this last action. The bid got below the peak of the the valley of the ask, and it continued up. For about what? A couple of pips maybe on that trade. Once again, the tick action. And that's pretty much it for the day, fellow traders. So there is madness to my methods. My methods are statistically sound. It's all been proven. You can look at the videos that I've posted that explain the methods and how I came about them. Maybe I'll do another series of them for the new people that can't seem to find the old videos. And maybe for the old people, just to give them a refresher. I'd probably have to do them one by one. It'd take, a few minutes to explain. Oh, and there was a question. Somebody asked me, they wanted to do some analysis. Yeah, in the 2017 donationals, there was the real-time price analyzer and the price travel analyzer, where you can put in, if price hits this, and then it, how many times does it go there? So, example, if price opens below the previous, okay, if price opens below the midpoint, how many times does it hit the midpoint and then fall back below the open? How many times does it hit the midpoint and make a new daily high? You can do all that kind of analysis there. You can set it up for the real time. You can set it up just to do the historical. So if you want to do those types of things, go ahead and ask. And I also had someone who asked me about the dashboard and divergence, because somebody out there is selling a divergence dashboard. And I'm not the only one that invents stuff or codes stuff. So they've got some dashboard, but he was asking how he could do it for MACD, and because I think the default or the example I sent out was on the RSI. Well, basically, you just put in the internal indicator you want to do divergence on, and you put load up the parameters, and the dashboard will show you divergence, either positive or negative, and how many bars ago that divergence is now being created. So anyway, fellow traders, remember, it's not what you trade, it's how you trade it. TheRumpledOne signing off to go drain the banks.